Hi guys, welcome to Trading in Zones. Today I thought I will cover one of these topics which is very less spoken in the market, which is mostly in terms of how do we interpret the price behavior and also understand the market structure. To the market day in and day out and doing a lot of day trading over a period of time, what I've realized is that there is a certain behavior to price which happens over a period of time, and then the price gets into a direction. So while we are trading index, I predominantly trade index on a daily basis. You would have seen me on live videos since last week. I've been trying to post as much as possible. So this is a quick video to give a peek into my thought process while I am day trading and how I'm perceiving the price behavior and the price structure. You always see that while the price is at a certain support and it jumps up, moves up the next day, while a lot of people might be thinking it is a short at a certain point in time, and then the next day it kind of moves down again, then creates a new kind of behavior, and then slowly the price starts moving up. So let's take Nifty as an example here, which you can see, and see how we are able to come to certain conclusions in terms of how the price is behaving, right? So we had a steep fall. Nifty took a steep fall on the 18th of May. So we can see that 9,160 within about 2 hours time, this came all the way to 8,800 odd levels, which is pretty steep in nature because this was very quick selling. But once this selling happened, what we could see was that there is good amount of retrace. But this retrace obviously was very weak because the price did not go all the way back up, right? It took some time for the price to go back up to the position where the selling had started happening. And if you can see, there is a repeat in phenomena in terms of selling happening again at the same probable range from the market perspective, right? So you can see if I take this range as where the selling actually started happening, pretty much at a similar level, the selling started happening on the 21st of May. So there seems to be a certain place to buy and a certain place to sell, and this all seems to be very easy or very less noise when you see the day charts or when you see the hourly charts like this. But however, when we come down to a 5-minute chart, there might be much more noise in terms of the price movement because these might not be as smooth as a trend as it looks on a 1 hour chart. There might be multiple corrections, multiple up moves, multiple profit bookings happening at different time frame. So there might be people who are trading at 5 minutes, 10 minutes, 15 minutes, 30 minutes. They might all be looking at booking their profits out. So in this kind of a situation, how do we make an observation onto price behavior? So after this kind of a fall, we see that there is a certain support which is marked out here. Based on the previous level it bounced up from. So based on how we are seeing the price, it is very clearly evident that this becomes a point of support where the market closed. Now, will I be able to take a long entry right out here? Maybe no. I might have to still wait and watch to see what level of support the market is willing to take. And how do I make that price behavior observation? So the first thing what I would do is, for example, in this kind of a situation, I would go and probably mark this price out. Now that I've read the chart on the 18th of May, I have a very clear understanding in terms of what the price level is. So around 8,800 odd level, the price seems to have held. The reason is the next day when I saw the market technically moved up from here and the market moved down and it closed here. So now I see there is a new closing price which has happened between 18th May to 19th May. Okay, so this is a huge up move which we are making an observation right over here, and the market held this particular level and it gave a strong up move and closed somewhere over here, and the next day the close happens here. Okay, and now the close happens here. Now this is kind of giving me a price pattern. Now if I just start mapping the closing prices between the few days, so I will have one move right over here, the second move right over here, the third move right over here, the fifth move right over here, and it might be a next up move again. I'm not sure. But again, there is certain things which the market has given me now as a price behavior for me to watch, and for me to make sure that I watch these price points on the shortest of time frame so that I can take a call based on whether that particular resistance or support is broken or whether that particular support or resistance is held. Now I can very clearly see the structure in terms of how the price is moving up over time, because obviously I'm seeing between the 19th of May till the 20th of May and a slight correction out here on the 21st of May to a little more correction on the 22nd of May. I'm thinking there is a probable up move which might continue. But for that continuation to happen, it needs to give me a price behavior right out here. Now there are a lot of examples. We have a group where I keep chatting, and a lot of my folks who are there who trade with me almost on a daily basis. I was telling them somewhere over here, be very cautious. It has created a doji right here at around 11:15, and I was suggesting, or I was advising them not to short the markets anymore. There is a reason for this, because when I come very close and when I start observing this particular price behavior, what I start seeing is, one is that there is a strong down move after the RBI news announcement which came here during the 9:15 1 hour candle, and then obviously from 10:15 onwards the price started moving down, and right at around 8,970 the price kicked up, and the next entire 1 hour I don't see the price moving up, neither do I see the price moving down. So I see some amount of indecision here. So the seller is trying his level best probably, or the buyer is probably trying his level best. Seller trying to push the market down and the buyer trying to push the market up. I mean, very clearly it is seen that it is indecisive. It is a fight between the buyer and seller, but the seller is definitely not winning. I'll tell you why, because if you start seeing very closely, there is not even once after this particular low, the low got tested. So every time it tried to create a new low, the price got pushed up, then came down, closed below, and then the next time the price came down almost similar low as 12:15, it happened at 1:15 and the market started moving up. So this becomes very important to make as an observation, because this is happening at a very key price point. Now if I draw the support line right out here, okay, you might say, yeah, now I can see the market is probably taking it as a support level right out there, right? Or if I try to pull this down and say, okay, market tested this particular consolidation here, you might say, yeah. Again, see, these supports and resistances are always evolving, always changing. What I saw as a support or a resistance historically was broken at this point in time at 9:15, but the earlier level which I had drawn at around 9,040 did not get tested. It moved down, but the support was not tested either, right? There was a gap which was created here, and it respected that gap and it started moving up. So there are multiple factors. We'll never be able to get the support and resistance to be of that accuracy, but we can create them as a reference point. But more than the reference points, what is very important is the behavior which we made an observation right over here, and now boiling it down to going long over here will probably give us a better probability, because the risk of going into a negative is much lower. And given that for the 3 hour the support has become very strong, any kind of a breakout on this particular 1 hour candle at 3:15 becomes a great opportunity for us to trade. Now when I boil down to a 15-minute chart, you can very clearly see what is happening out here, right? So you can see a pin bar kind of a behavior, a doji, and one more almost doji kind of a behavior, and a strong buy which kicked in. So this buy covering almost these three candles from a price perspective and closing right over here shows me some amount of strength. Now I can boil it down to further 5 minutes to see how the 5-minute chart has behaved, and you can see there is a strong pin bar and a strong candle reversing. And again, this is something which we are making as an observation from good 1040. We are watching it all the way to 11:40, 11:45, 12 o'clock, and then we are seeing this almost at around 1:40. So good 2-3 hours time, we are seeing a certain price structure which is happening. So we had a strong move down, there is a move up, and then we are seeing that the move here is held. It is not trying to make a low, and then now the market starts moving up, right? And then when it comes into this consolidation, this might give you an opportunity to take an entry. This might give you an opportunity to take an entry, keep a small stop loss right out here, and then stay in the trade until it probably tests the next resistance level, right? And the next resistance level is right out here. So you wait and you kind of get your moves, and you take entries at retraces, because you watch, you see the retrace happening, and then you see that the level has been held for good 5 minutes more, and then you can take an entry over here right above 9000 level with a stop loss below the swing low, and then stay in the trade. This can go wrong as well, but the amount of risk what you're taking is much lower when you're trying to get these kind of entries. And also you have observed over a period of last 3 hours how the price behavior is. So it's very, very important for us to understand how market is behaving on a longer period of time, which can create or provide us probabilities in terms of how we can trade. So now for me as a trader, obviously this particular point where the market held a strong support will become a key area to watch. All right. So obviously this is one of the key areas. Obviously it is closed above my previously marked resistance level, which had cleared right over here, and we could see support kicking in here, moving up, getting rejected, coming down, right? And then it's holding this particular level for quite some time, and then it tries to move up. So now obviously there can be multiple things which we can think of as probabilities to happen when the market opens. Either the market might move down, test the support, and then move up, right? Which could be one probability. Or we can also say that the market might straight fall through or open gap down and break through and go down to the previous level. Anything can happen. We can predict, or we can try to see certain movements happening in the market based on certain basic analysis. Like I had shared some analysis based on how the market was creating a divergence right over here. It created a low on here at 10:15, 18th of May. By closing, it created a new low, but the indicator was suggesting a divergence. Now I've explained in multiple videos that how it creates a divergence, and divergence is nothing but a mathematical calculation in the market, because in 2 hours when there is a strong down move like this, the next down move is much smaller, and when the price holds this particular down move, the divergence becomes effective. Obviously trying to buy on these divergences creates a lot of risk, because the next day might be an overspill, market might open gap down, and then it might start moving up, and this gap down might create panic and it might make you sell. All right, so it's very important that you stay patient. You see how the market behavior is, you see how the price is holding here, how the price is holding here, how the price is holding here, and then you make an assessment, take an entry at the support when you see price action on the shorter time frame, right? So you could see here at around 13:30, 13:15 odd level, when it started doing this particular breakout, it became a great entry for people to take an entry, keep a stop loss right over here below the consolidation or below the previous swing low. Either way, you can manage your risk, and one could have expected the market to move all the way up till here. either from a carry forward position perspective or even from a day trade perspective. This would have given a very nice move. So this is how one can review basics of how divergence is created on a longer time frame, how price is behaving, how the structure of the market is, and how the structure is holding at different levels from a price behavior perspective. So it's very important to understand this behavior, interpret this behavior, and then accordingly assess what would be the right level for you to get an entry, what would be the right level for you to keep a stop loss, and then take a trade. How historically a certain sell is picking up on a 15th of May, or how the sell happened here, or how the sell happened here, or what would be a probable resistance level if it starts moving up, right? So all these things are some things which we need to watch, which we need to gain an understanding of, and then realize that, oh, okay, there seems to be some amount of support which has turned resistance. There is resistance right on top over here, and there is resistance right on top of over here. So there is quite a bit of selling which is happening here since the 15th of May, which we saw again the selling kicking in right over here. So will this bottom be strong? Will this break the selling which happened over here immediately? Will the market move sideways over a period of time? All these are questions which time will answer. What really is our observation of the market over a period of time? How do I perceive these moves? What observations have I gathered over a period of time? And am I able to make those observations into a convertible action? Because if I'm able to convert my observations into an action, and if those actions create positive probabilities to me over a period of time, then they became very profitable trades. The technical analysis wouldn't change much in terms of whether it's a Bitcoin, whether it is not a Bitcoin. The reason is all the way the price behaves, the price structure is created, everything is pretty much how the market moves, right? So I'll show you some quick charts here in terms of what I was seeing, what I was buying, and how the market was behaving, right? I will give you a very quick explanation. This is a paper trade which I was doing, 200 Bitcoin, $6,179 in profit. Great stuff, right? But if you see how the price is behaving here, right, I can see here, one, there is a strong reversal pattern. You can call it a tweezer pattern. What I'm seeing is how is the price behaving post this pattern. There is a new low which is created over here. This is a 1 hour chart. There is a new low which is created over here. There is a new low which is created over here. Tried to make an up move, did not succeed. Trying to make a down move, it's not succeeding. So I'm seeing that there is quite a bit of buying which is happening at around 9,100 plus range, which you can see very clearly on the chart. All right, and you can see my message right after this chart, expecting a good spike. Let's see. The reason why I'm saying that is because I'm thinking that this is going to test the high and it is going to hold this bottom, which is a support which has become right over here. Let me quickly draw a line on this particular chart on the screen. If you see roughly somewhere over here, it's holding. Now that's a price behavior which I'm watching. So I'm seeing it's holding here, I'm seeing it's holding here, I'm seeing now it is holding very strongly here. So I'm expecting it to break. I don't know if it is going to happen in the next few minutes or in the next few hours, because this is an hourly chart. I will have to wait patient, but I know for sure that entries in this range of around 9,100 change is going to give me a good move, right? So what happened to the market right after that? So this was one of the observations which I made, message I posted, and then right after some time it started spiking, right? So this was again, if you see, this is a 3-minute chart, and if you see, price is around 9,203 here, and after some time the price further moved 9,243. So it just kept moving. So this became a great opportunity, and the observation which I made in terms of where the buyer is really interested from a price perspective, and how the market structure kept moving up, and every time it started creating, the low started becoming a new low, and then a strong bounce started happening, and then the market was holding, and then it gave a great spike. So these are the opportunities for people to really figure out how to take an entry and how to keep a stop loss, where to take an entry, how to see the behavior and see a pattern appearing out of that behavior. So you can actually see that happening. I can probably open the trading view. Let me quickly check out here. Okay, this is where I think it started falling through. I'm trying to figure out. Okay, here is my analysis. There it is. So this is the spike which I was expecting yesterday. It's moved up, it's hit the resistance very hard, and then it's broken through it. So once it broke through this, so I was trying to discuss about how it is holding the price structure, how it is expected to go and hit the top here from a resistance perspective. So you can see a strong down move and then an attempt to move up which failed, and it is dropped down. Okay, that's why it's very, very important for one to make these observations from a market perspective and see how it is behaving. So when you're trading here on the shortest of the time frame, obviously you want to go long because the structure is suggesting it is moving up. But then after the structure breaks and the support which was kicking in multiple times at multiple places is broken, now you're looking at a retrace short opportunity at any particular price point, and then you start going short because the structure is completely broken and the behavior is completely changed now. So this is how the market typically moves, and this is how you can decide to take certain trades from a trade reversal perspectives. Okay, and now you can see on an hourly level there is still 11 more minutes to go. There is a strong support again which is kicked in, which is saying that there might be more buyers who are interested at this particular price point. But while you're trading intraday, this kind of an analysis and expecting it to move up is more than sufficient for any kind of a trader to trade with the least amount of risk, expecting it to move up, right? At the same time, someone who's trading on the longest of the time frame, who's watching that the market has come down and waiting for an opportunity to short, will look at shorting right when it tries to retrace, and he would look at these opportunities to short because he's seeing that for 4 hours it is consolidation, there's a strong up move, and this consolidation breaks, and when it starts breaking, it also breaks the support which was there for a very long period of time. And once this support breaks, every retrace becomes a short opportunity for this particular trader who's trading on a longer time frame, or he might be jumping to short right over here with a very small stop loss as well. I hope I've given a fair idea in terms of doing intraday trades on any instrument, how you can make an observation of price behavior. It really does not matter what instrument you are trying to trade. Any instrument you pick up, these behaviors, these structures are very, very common because it's all people who are trading, and people's behavior wouldn't change. I hope this video gives a detailed explanation of how you can make your observation on price behavior, how you can see the structure of price moving up, and where you can take these entries from an intraday perspective on a shorter time frame, and how you can time those entries once you understand the price behavior on a longer time frame like a 1 hour chart. Obviously this will give you a great trade, and this is not based on any kind of setups, any kind of moving averages. This is simply based on how the price is behaving over a period of time. So it is all a game of probability, and it is all a game of buyer and seller and their mindset, and it's all about you being on the right side of the trade. This is a pure play intraday video. Again, you can do a similar analysis on a weekly or a monthly chart, and you can use the 1 day charts to time your entries, like how we are using a shorter time frame like a 3 minute or a 1 minute chart to take entries on a day trade. You can do the same with a weekly and monthly chart and use a 1 day or a 1 hour chart to time your entries. That's about it for today, guys. We'll cover more on these price structures and price behaviors for longer time frame in my next video. Thank you. Have a wonderful day ahead.